Hello, welcome to Rappler Talk. I'm Marites Vitug, and joining us is Professor Emmanuel de Dios of the UP School of Economics. It's a very timely interview because we will take off from the biggest issue of the week, rising inflation, 6.4%, the highest in 9 years. Welcome, Professor de Dios.
Thank you for
Thank you for
inviting
this
me.
very rare appearance. So as I was saying earlier, let's start with this very disturbing problem of the highest inflation rate we've seen in 6 years. So what has led to this unsettling situation?
It's a series of unfortunate events, I think. I think the main thing is that it could have been avoided. Um, um, the way to see it is that if you compare historically the Philippines' own inflation record, over the past 7 or so years, we've been averaging about 3% inflation,
Yes.
sometimes even lower than that. And in fact, a lot of countries in the region are also doing that and are still doing that now. So the Philippines really stands out as a country that has somehow gotten it wrong. And it's a matter of analysis to really tease out what the various factors are. Um, and many agents are involved. There are international factors involved, but I think the main thing is that the adjustment to these international influences could have been much better if the government had been more prepared.
For example, the unexpected rise in petroleum prices, was it difficult to forecast?
It it was not. Petroleum prices have been rising since I think middle of last year, so it was not a surprise at all. What uh, aggravated it, however, was the train law, which came into effect in January of this year, and that was on top of the rising oil prices. It was a miscalculation, I think, because um, the economic managers, I think, were uh, dealing with the past phenomenon when oil prices worldwide were rather low. And the philosophy was, it's too low. Why don't we tax the difference away and earn revenue for our infrastructure program? And in any case, to raise the price of oil, which is historic, which at that moment was low, will not do too much harm to the economy. The miscalculation was that they did not see that the price of oil was already on the way up. And even if you said that the reason for a tax is like a carbon tax, environmental
Yes.
reasons, there's no need for that if the price of oil is already going up. People will automatically cut their consumption of petroleum.
The president blamed Donald Trump and his trade wars for our rising inflation. Is that one factor, or where did the Philippines go wrong, or maybe where did the others go wrong?
No, when I heard the president say that, I immediately thought to myself, am I missing something? uh, is there some part of economic theory, economic logic that I have misunderstood? After all, this is the president saying that Donald Trump's imposition of tariffs is the main reason for inflation in the Philippines. But it is not. Both in logic and in fact. Trump imposed tariffs on China in June 2018. By this time, Philippine inflation was already running at an historically high 5.2%. Secondly, in logic, what is the effect of a tariff on China on the Philippines? Actually, I was listening to a Bloomberg interview. Some people were saying, in relation to Vietnam, when Trump imposed tariffs on Chinese imports, Vietnam would have benefited because the Chinese might have relocated some of their factories. So there's really no logic um, or even chronological reason for that to have occurred. What it does tell me, however, is that either the president is somewhat detached from economic affairs, so that he's not getting the best information. Either he's not interested or he's not getting the best information. But you can see some of this detachment, not just with the president uh, saying a remark like that, but also in some of the economic managers who sometimes say, well, 6% inflation is okay, we've been there before, don't be crybabies.
your former
That-
colleagues in the UP School
well,
of Economics.
yes.
Anyway.
That's another story. But I think that represents a kind of, um, I don't know, I said detachment, but
Yeah.
at worst it's a callousness to the plight of many people. The reason for this is that we're coming from an era of very low inflation, and to suddenly raise prices like that, to cause a rise in prices that's very sudden, really hits people in the pocketbook.
Yeah.
Now you ask me what the possible reasons were.
Yes.
I have to go through an enumeration.
Yeah, please do. Anyway,
Okay.
you are not detached.
Well, first of all, I think I'd have to say that a completely avoidable part of the inflation was the increase in rice prices. Uh, the Philippines is not the only rice importing country in the region. Indonesia is a rice importer. I think Malaysia is a rice importer. But you don't see the spike in rice prices in these countries. There's no reason to attribute any of that to world trade. It's really a mismanagement of the rice supply by particularly the NFA. That's another
another
story,
story, yes.
but that's a major part of the
Okay.
rise in price, and it coincided with the increase in prices in the early part of this year, because if you remember, there was a dispute within the NFA about whether to import or
Yes.
how to import, but
Yes.
that basically delayed the coming in of sufficient rice supply. So that's one. The other part of it is train itself. I already mentioned that there was, I guess, a miscalculation on the part of the economic managers about the impact of petroleum taxes in
Yes.
particular on the general price level. Um, the, the economic team keeps on saying it's less than 1%. I doubt whether it's really just like that.
Because earlier they argued that the rise in oil prices, or the indirect tax rather on gasoline, will affect only the rich. But it's affecting
Well,
everyone.
look, everybody takes transport. How can it affect only the rich? And in general, it's a shift away from. I think I made this point in the past. It's a shift away from direct taxation on incomes and wealth and towards indirect
Indirect,
taxation,
yes.
which is on commodities,
Yes.
which is the easy way of raising revenue. The funny thing is that the Department of Finance gives and takes away. It gave in terms of the reduction in tax rates, but it always wants to take things back. And so you become progressive in terms of giving lower tax rates to individuals, but you impose taxes on the entire population through these commodity taxes anyway. And given the miscalculation regarding the price of petroleum products, I don't think the compensatory measures that the government has given in terms of these unconditional cash transfers really suffice to make up for the disturbance that the train created.
So you mentioned rice, the train,
The train, and then of course
mismanagement.
there is the exchange rate. This is a bit more difficult because it's a combination of international factors and domestic conditions. The international reality is that interest rates in particularly the US have been going up, and that causes capital outflows from the Philippines as the investors shift to a more safe haven like the US. The real question is why the impact on the Philippines has been so great, whereas it has not been as great in a lot of other countries. Some people probably read that there is now a worry in international markets regarding certain countries, so-called emerging markets, that seem vulnerable to a contagion these days. So the bad cases are Turkey, Argentina, India, but in this part of the world, there's just Indonesia and the Philippines for two reasons. One is that we're the only two countries here that are running current account deficits. Our imports are well in excess of our exports. In fact, for the Philippines, it's not terribly bad, but the trend is to worsen. And that is linked to a policy of the government to, well, like it or not, it's the expansionary policy of the government, including the build, build, build view that we can afford to run a budget deficit, we can afford to run a current account deficit. In this atmosphere, however, where international markets are jittery, that kind of strategy is a bit risky. And it makes you more vulnerable to what is known as a contagion. You might get lumped with countries like Turkey, Argentina.
So there's that risk for the Philippines?
There is that risk for the Philippines.
What's the time, I mean, what is your fearful
well,
forecast?
part of it is already evident in the way the peso has drastically depreciated. We're the most poorly performing currency in the region. I think together with the rupee. And India is also running a current account deficit. To be fair, sometimes the international markets run more on sentiment than on real fundamentals. And I would not say the Philippines is really in a really bad way like Argentina is or like Turkey is. But in this kind of an atmosphere, it's like a beauty contest. You're ranked depending on your characteristics, as it were.
Perception of character.
Well, it's a matter of degree. If you stand out in a certain negative respect, then you get marked. And we stand out in several respects. One is the current account deficit, as I mentioned. The other is that we've been running a budget deficit for the last 2 years, a bigger one for the last 2 years of the Duterte administration. Both of those are specific to the Duterte administration. Until the last year of the previous administration, we had the current account surplus. Now we have the current account deficit. I'm not saying it's entirely bad, but this is a risky situation.
How about the unpredictability of the president's rhetoric or his threats, insults?
Well,
is that a factor?
That is, I think that will show up in the degree to which foreign investments come in. I know that we record on a year-on-year basis, we record a pretty decent growth of direct foreign investments, but this comes from a very low base. Vietnam's foreign investment is something like 6% of its GDP. Ours is 3% of our GDP. So there's a big difference. And one of my contentions has been that we're not about to fall off the cliff, but we could be doing a lot better. Our growth rates have disappointed, actually, even the government's own projections.
Yes.
And the government's projections are actually reasonable for our level of income. That they are not being met tells you that something is wrong.
But we've always been told that, well, the projection is we're the third or second fastest growing economy next to China. But
And Vietnam.
But you put up a chart and you burst the bubble and said, no, we're number 7. And you included Nepal and of course the economic...
Laos and Cambodia.
Yeah, and the economic managers say, no, we shouldn't include those countries because they're from a low base. What's your...
Well, actually, if you take a look at it, you should not be comparing ourselves to countries like China or Thailand or Malaysia. We should not, because technically these are upper middle income countries. We are still a lower middle income country, and a lot of standard growth theory will tell you that the poorer you are, the faster you can grow. So to grow faster than Thailand or I don't know, some other middle income country like Malaysia, that's not remarkable. We should be comparing ourselves to those in the same class. And the point is that countries in this class have been growing at much higher rates than we have. For example, over the last 5 years, surprisingly, Laos has been growing at 7%. When have we grown at 70% over 5 years continuously? Not at all.
Yeah.
So in a sense, we have not even reached that easy, so-called easy phase of growth. We are missing it, and that's my complaint. Why are we not there?
So, as you were saying, it's a combination of policy, of course, leadership,
Yeah,
and
I think there's a good deal of uncertainty still in the economy from the way President Duterte has been running the country. Of course, uh, the, the initial hope was that, well, maybe he's doing it. He would leave the management of the
yes,
economy to his economic
manage,
team and
yes.
then concentrate on the drug war. But there's no separating the two, one from the other. The reason is that if you have this um, atmosphere of authoritarianism and arbitrary decisions, which he has demonstrated not only in the drug war but also in the economy. When he targeted certain firms like some online gambling firms, like the tobacco firm, like Boracay,
Yes.
like the mining firms. These are not necessarily in and of themselves bad decisions, but they do demonstrate that the current administration can do what it wants willfully.
I see.
And if you combine that with, I would say, a question regarding the moral compass of the administration, then as an investor, you are not sure uh, what will happen the next day.
I see.
Who will get hit? Is it just because you can? It can be them today, and then you can probably say, well, it's not me. I'm a good taxpayer. I am not. I'm a good environmental behavior. But what's to prevent that from happening?
I see. So there is no consistency. It's quite arbitrary.
It's quite arbitrary. It's precipitate. It's suddenly there is a decision, and everybody has to say yes.
That even outside the economic sector, like today, this afternoon, we'll be listening to the president
Yeah.
speak at 3 o'clock, and we're all speculating, but the context is there's an uncertainty again
Yeah.
pending the revocation of the amnesty of
Yeah.
Senator Trillanes. So things like that, they
Even
affect the economy.
You're even talking about changing until lately. You're even talking about changing the system of government. As an investor, how can you predict what will happen? It's a good thing foreign investment has not completely dried up. It's a good thing that domestic investment continues to be tolerant of the. But frankly speaking, business will always be tolerant until it reaches the point when they can no longer do business. Uh, let's put it this way: it's the business of business to be timid with respect to arbitrary power. They will try to exist as best they can, even though the ground may be shifting beneath them. You have instances of cronyism already. The growth of businesses
Davao.
in Davao, the awarding of contracts. But the mainstream businesses might say, well, it's okay that we can live with that. But up to what point? Up to what level of uncertainty can you live with that?
Comparing ourselves to our economy to Thailand, I sent you this question.
Yeah.
That Thai economy is called to be a Teflon economy despite the military.
Actually, it's
junta.
not. Actually, if
It's
you look
not?
at the growth rates of Thailand since the military took over, they've actually taken a hit. But the other part of it is this: that to a certain extent, there is indeed an autonomous existence of the economy, even as politics may change.
Yeah.
In Thailand, for example, it's hard to argue whether the slowdown in growth is due to the military takeover or to some demographic variable like zero population growth. As you have slower population growth, the economy naturally tends to grow slower. In the Philippines, arguing the other way, there are really good reasons to think that the Philippines, independent of who is in power, has great potential. We have a very young population. It's becoming of working age, uh, um, fairly literate. Uh, we're importing technology freely. The economy is relatively liberal. Uh, the real question is why can't it go faster? So in a sense, you can draw. You can have a. You, it's not a disconnect, but you can insulate to some extent
Yes,
that
that-
part of the economic picture, which has to do more with long-term trends, from the uncertainty. You will see it only to the extent that you grow not at your full potential. But on the other hand, you can also put it this way: it doesn't matter if you change the government.
As long as the structure remains the
The,
same.
as long as there's a modicum of sound economic policy, basically, then it will grow. But there are many things that could be done better. For example, the role of the private sector could have been larger, but the government chose to abandon
This is in
essentially
the
the PPP.
Yes, this is part of the build.
Yes.
That most of the funding comes from the government or
The government and
ODA.
ODA. And that's a
Yeah.
problem, you see. That's part of the reason that the bill has become a disappointment.
You said wait.
The reason is that they're trying, I think ultimately they tried to fix the wrong problem. They thought it was a problem of money and revenue. It's a problem of implementation. That's where the bottlenecks were. And the current administration has not addressed that problem adequately. In fact, you have a perverse problem that you generate more revenue because of the new tax laws, and not being able to implement the really crucial projects. There's a backup of funding, and a lot of this is being used for populist purposes. After all, the congressman will say, "Well, the money is there. It's not moving. Why can't we use it for other things?"
And
And that's bad in the larger sense, because you're going to run a larger budget deficit. You're going to run a larger current account deficit, which makes you look bad and hits your exchange rate and hits your inflation.
so with this upcoming train 2, looks like it may
It's
get
also unsettling.
yes, but looks like the prospects are not good for its passage in Congress.
Well, I guess the Congress got burned with Train 1. The fact that the government could not accurately predict what its impact would be. I think recently the Department of Finance admitted that they had mispredicted the level of inflation that was going to happen. Part of that is strain. But it does not, I suppose, rightly or wrongly, the lawmakers are saying you have to find out first what's going on. Because time after time, the government managers have been surprised. They have been surprised by the inflation rate. They have been surprised by the substandard growth rate. And then you want Congress to pass new laws when you are constantly being surprised.
So the president is no longer surprised at all these surprises. But anyway, just to wind up the interview, in the last 2 years of President Aquino, he had a big scandal on Mama Sapano, the killing of the soldiers. But this did not apparently affect the growth of the economy. So what was right there, or why did that?
No, that's the same thing that makes the economy keep on going now. I'm saying that there are long-term trends that make the economy keep going.
Okay.
You have a young population, it's educated, the private sector is very liquid. You have to release it. You have to use it. And I don't think the current administration is fully utilizing it.
The last question is, people who have been asking that, there have been so many killings of suspected drug addicts, and this has been a big problem, yet, businessmen continue to invest.
Yeah.
There is a moral vacuum here, but this inflation, they say, is, it's more difficult to take than the killings because it affects
it affects everybody.
Everybody.
In the case of killing Shu, it's like being under the Nazis. They will affect only the communists. They affect only the Jews, and then the mainstream is not affected. But inflation is something that affects everybody, the lower income classes, the middle classes, even the rich. And it's also wrong to say that it's okay to have inflation as long as there is growth. First of all, the growth is not even according to your own standards. But secondly, I think it's more difficult for people to lose what they already have than to gain something. And with inflation, you lose something you already have, income that you're already earning. Whereas growth is just an add-on, and not everybody benefits from it.
So thank you very much, Professor
Pleasure.
De Dios. On that note, we end this interview, and let's keep watching, because as you said, there is a risk. We face a risk with this high inflation rate and unsound economic policy. So thank you for listening, and we will await the President's announcement today. Thank you.